Hi guys, welcome back to another video, and in this video I'll be breaking down multi-time frame analysis and how to form a market bias. Market sentiment is super important in trading, and it will really help with your confidence when entering trades and making sure you're on the right side of the market. If you have any questions regarding this or any questions at all about my trading, what model I trade, what strategy I trade, leave them in the comments or join the free Discord, and I'll be leaving that in the description down below. So without further ado, let's get into the charts. So first of all, what I want to be seeing is for all of my time frames to be lining up. This is super important. I want to be making sure all my time frames, if I'm looking for buys, are looking bullish. If I'm looking for sells, I want to see price action giving me lower highs and higher lows, for example. So if we look to the daily, the first thing I'm looking for are my swing points. And here, this would be my first swing point. This one would be my second swing point here. This would be my protected low, and this would be my weak high. Weak high being, this is what I think is going to be taken out first. I think price is going to take out this. This is why it's called a weak high, and this is going to be up my protected low. This is where I think price won't take out. And what do I look for? Well, the first thing I look for is areas of supply and demand. So as you can see, we've just seen that price has bounced off this daily order block, this daily demand. And another great confluence is that I have liquidity, which has just been swept. As you can see here, price has come down in a nice straight movement into our area of demand. It's wicked off, wicked in, and now it's giving me bullish price action with these two very nice bullish candles. And it swept this liquidity. Some people call this a liquidity sweep, where it comes down, takes out these stop orders, and then it goes to higher prices. We can see bullish price action with breaks of structures here, and more breaks of structures here. This is really important because our liquidity here has broken structure, which makes this a really nice valid area of liquidity in the market. What we also see here is we see very large areas of demand getting respected multiple times, and as we come up to our area at the moment, we see multiple areas of demand getting respected, like so. 1, 2, and then 3 here. And these areas are obviously getting respected, as you can see if I zoom in. When we come to these areas, we're seeing wicks off, large wicks into our area, which means we are respecting these key areas. If we see large areas of in a downtrend, we're seeing areas of supply getting respected, like so, one area here. But when we see areas of supply get broken, like so, then this is indicating that market direction is turning. If I make this a lot more simpler for you guys, we're in a bullish market. We expect price to respect these areas like so. These will be our areas of demand. These will be our areas of demand. But when we see supply get disrespected like this, then we know that we are remaining bullish. But when we see areas of supply getting respected, then what we can expect is for market conditions to change direction. And what I'll be waiting is for an area of supply to be respected, to disrespect an area of demand, and then for another area like this. And this is where I'll also be looking for my entries. But on the daily time frame, all I would want to be seeing is my swing points and are areas of supply and demand getting respected or not. When we go down to the 4 hour, I'm just simply looking at very recent price action. So all I need to see here is we see this very nice break of structure with a bullish close ahead of me, bullish close here. And what do we also see? Well, this is a very big confluence for me, and this is something I always am looking for in the market. These big down movements like this. What does this big down movement mean? Well, if we see a big down movement to a key area, this is a daily order block, so this is a very big key area in the market. We see price very often retrace. So this would be a great time to enter a buy. We just entered our key area, entered our one daily order block. We see the breaker structure with a candle close over this high here. So right now will be a perfect time to look for a buy, draw out some more areas of demand, and try and look for an entry. So we have this 4-hour demand here. We have another 4-hour demand here. And now I'm looking for my entries. So I don't look for my entries in the 4-hour, I just draw out more key zones. So this could be a very nice area to look for a buy. This would be a very nice area to look for a buy. If I come down to my 30-minute time frame, this is where I take a lot of my entries off. Then again, all I'm looking for is my areas of supply and demand. I have an area of demand here. We are looking for buys. We've just seen this break of structure. So if you see this break of structure and price come down into this area, we'll be very interested. We see this area of demand here. Why do I prefer this area of demand to this area of demand? It's not because it's just lower prices, it's because we have resting liquidity above our area of demand. This is what I trade. I trade liquidity with supply and demand. So I'm always looking for in the market prices to create a demand area. I'm then looking for some bullish price action to show strong buyers have entered the market. I'm then looking for liquidity to be made. Liquidity with a break of structure is A+ for me, and I'm looking for direct movement straight down to my zone, which is where I look for an entry off the close of a bullish candle with a wick into the zone, and then I normally target the highs. So this liquidity really only becomes valid for me if I see a break of structure. And this is what is very, very key. When you see areas of liquidity, liquidity is just where people put their stop losses or people put their limit orders. If I'm in a trade here and I think price is going to reverse from this point, where am I going to put my stop loss? Below the low. Simplest way to explain what liquidity is in the market. So this would be a much better area of demand than this area. So let's just see how price plays out. Okay, we see another area of demand getting created here. So what will I do? I'll draw it out. I'm only really interested of where the candle closes here, because we do close. It does wick above our next candle here. So I just draw it out like this. Perfect. Now I get some valid liquidity, with this liquidity being here. This is even nicer because we're currently, this demand here is in our 4-hour area of demand as well. So this is perfect. So now I just want to see some even, okay, we got another breaker structure. So we got this breaker structure as well. So we have one breaker structure, we have another breaker structure. We can see areas of demand getting respected. This is like perfect analysis for me. We see areas of demand getting respected. We see liquidity being made in a 4-hour area of demand with an area of demand on the 30-minute time frame. And now all we want to see is price retrace into this area in a straight movement like we do here. And I have just skipped it too far, but I would have entered off this bullish close with a candle here with my stop loss at the bottom of the candle targeting the highs for a nice 1 to 8 RR. I'll probably take a TP1 around the 1 to 4 area, 1 to 5 area, and even because we have this huge gap to fill in the market, I would probably be looking for at least a 1 to 10 here on this setup. So let's just see what happens. And just like that, we see prices go for a beautiful 1 to 10. And if you don't believe, I get a lot of people in the comments always say, oh, this is a 1 in a year setup. This happens. I take 3 or 4 setups a week with this exact same setup every single day. And everyone in my Discord are taking this service as well. So I will leave my Discord in the description below. If you have found this video at all helpful, developing a bias in the market, because what's also very interesting is people who are only trying to trade on one time frame would say, well, actually we're looking bearish because we've had this huge move down. And we can see bearish price action here, we can see, but no, we've just come to an area of daily demand, so we've obviously respected it. We've taken out this liquidity here. We've also respecting 4 hourly demands, and 30-minute demands, so we're obviously bullish. And now we're looking for buys in the market, and we managed to catch a really nice 1 to 10, which is more than the S&P makes in a single year. So yeah, if you would like to learn the strategy I trade, if you do want to see how I analyze the market, subscribe to the YouTube channel. It will really help me out. And make sure you leave a like on the video. If you want to comment at all, ask me any questions, ask in the Discord or comment down below. And yeah, I guess I'll see you in the next video.